ExamPrep.School. Okay, Casualty Adjuster. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Commercial casualty policies, bonds, and related terms. Insurance terms and related concepts. Licensing, policy provisions, and contract law. State insurance, statutes, rules, and regulations. State workers' compensation. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following best describes the primary difference between pure risk and speculative risk? A. Pure risk involves only the possibility of loss or no loss, whereas speculative risk includes the possibility of loss, gain, or neither. B. Pure risk offers potential for profit or loss, while speculative risk only exposes to loss without any chance of gain. C. Pure risk arises exclusively from deliberate business activities, whereas speculative risk stems from unforeseen natural events. D. Pure risk typically carries quantifiable financial outcomes, whereas speculative risk is only a concern for reputational damage. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. This option is correct because pure risk involves only potential loss or no change, while speculative risk also carries the potential for gain alongside loss or no change. Reason B is not correct. This choice is wrong because it reverses the definitions. Pure risk does not offer profit potential. Reason C is not correct. This choice is wrong because it incorrectly ties risk types to sources rather than outcome possibilities. Reason D is not correct. This choice is wrong because speculative risk also involves potential financial gain or loss, not just reputational concerns. Question 2. During a routine inspection of a client's warehouse, an adjuster observes rows of wooden pallets stacked within 6 inches of the overhead sprinkler heads along one wall. Which physical hazard is present that increases the probability of loss? A. Accumulation of combustible dust on shelving surfaces. B. Inadequate clearance around fire protection equipment. C. Defective electrical wiring within ceiling panels. D. Corroded plumbing pipes in the sprinkler system. The correct answer is B. This scenario describes pallets stacked too close to sprinkler heads, which can impair fire suppression coverage and increase the likelihood of significant loss. Reason A is not correct. Combustible dust accumulation is a hazard, but is not indicated by the described pallet stacking clearance. Reason C is not correct. Defective wiring poses a hazard, but the scenario focuses on proximity of pallets to sprinkler heads, not electrical issues. Reason D is not correct. Corroded sprinkler pipes can increase loss risk, but the scenario highlights inadequate clearance, not pipe condition. Question 3. Which of the following best represents the fundamental basis for establishing insurable interest under a property insurance contract? A. Proof of actual monetary loss sustained at the time of a claim. B. Legal ownership of the insured property at policy issuance. C. Evidence that damage would cause a quantifiable financial detriment. D. Insurer's agreement to indemnify regardless of any financial loss. The correct answer is C. The correct answer is that insurable interest requires demonstration that damage would cause a measurable financial detriment, reflecting the indemnity principle of covering actual financial loss. Reason A is not correct. Establishing insurable interest concerns potential loss, while proof of loss is about evidence after loss occurs. Reason B is not correct. Ownership may indicate an interest, but is neither required nor sufficient to establish insurable interest. Reason D is not correct. Insurer's agreement to indemnify is part of the contract, but does not define the insured's interest in the property. Question 4. In property insurance, insurable interest must exist at which point for a valid claim? A. Only at the policy's inception date. B. At the moment a covered loss occurs. C. At both policy issuance and claim adjustment. D. When the insurer processes the claim payment. The correct answer is B. The correct answer is that insurable interest must be present at the moment of loss, as property insurance requires an actual interest in the insured property when the loss happens. Reason A is not correct. Requiring interest only at inception applies to life insurance, not property insurance. Reason C is not correct. Property insurance focuses on interest at the moment of loss rather than at adjustment. Reason D is not correct. Insurable interest timing is tied to the loss event, not the payment process. Question 5. Which of the following best defines the per occurrence limit of liability in an insurance policy? A. The maximum amount the insurer will pay for multiple occurrences under the same policy period. B. The maximum amount payable to each claimant for damage arising from one covered occurrence. C. The total maximum amount the insurer will pay for all claims during the policy period. D. The maximum amount the insurer will pay for all covered losses from a single occurrence, regardless of number of claimants. The correct answer is D. The correct answer is the aggregate cap on insurer liability for a single incident, not on a per-claimant or policy period basis. Reason A is not correct. This refers to a limit for multiple occurrences, rather than the cap for one occurrence. Reason B is not correct. This describes a per-claimant limit rather than the aggregate amount for the entire occurrence. Reason C is not correct. This describes the aggregate limit for the policy period, not the limit for a single event. Question 6. A liability policy provides $250,000 per occurrence and $600,000 aggregate limits. The insurer paid $200,000 for a first claim and $250,000 for a second. How much will the insurer pay on a third $200,000 claim? A. $0. B. $200,000. C. $250,000. D. $150,000. The correct answer is D. The correct answer is $150,000 because after paying $200,000 and $250,000, totaling $450,000, only $150,000 of the $600,000 aggregate limit remains, although the per occurrence limit is $250,000 aggregate limits cap overall liability. Reason A is not correct. This assumes the aggregate has been exhausted, which is not the case. Reason B is not correct. This choice incorrectly assumes full payment of the third claim without considering the remaining aggregate limit. Reason C is not correct. This reflects the per occurrence limit rather than the remaining aggregate limit. Question 7. Under a standard ISO commercial general liability policy, the term named insured is best defined as A. The person or organization specifically designated as the insured in the declaration section of the policy. B. All entities that the named insured designates on a supplemental schedule attached to the policy. C. Any subsidiary formed during the policy term that is not expressly excluded by an endorsement. D. Both the insured organization identified in the declarations and its individual officers or partners. The correct answer is A. The named insured under a commercial general liability policy is the person or organization exactly as it appears in the declarations. Subsidiaries, supplemental entities, and individual officers are not automatically included unless an endorsement specifically adds them as named insureds. Reason B is not correct. Entities listed on a supplemental schedule become insured only if added by endorsement, not automatically as named insureds. Reason C is not correct. Subsidiaries are not included by default. Coverage for them requires an explicit endorsement. Reason D is not correct. Officers and partners of the named organization are not automatically named insureds without a specific endorsement. Question 8. A commercial general liability policy lists parent co as the first named insured and subsidiary co as an additional named insured. The insurer decides to cancel the policy effective July 1st and mails a 30-day cancellation notice on June 1st addressed solely to subsidiary co's branch office. Parent co does not receive a copy of the notice and remains unaware of the impending cancellation. On July 10th, a claim is submitted under the policy. Which of the following best describes the effect of the cancellation? A. The cancellation is valid because the insurer provided the required 30 days notice before the effective date. B. The cancellation is valid if notice is sent to any one of the named insureds listed on the policy. C. The cancellation is ineffective because the notice must be sent to the first named insured at the address shown in the policy declarations. D. The cancellation is invalid because the insurer must include a statement of reason in the cancellation notice. The correct answer is C. Under the policy's cancellation provision, the insurer must mail notice to the first named insured at the address shown in the declarations. Sending notice only to an additional named insured does not satisfy that requirement, so the cancellation is ineffective. Reason A is not correct. Although the timing met the 30-day requirement, the notice was not delivered to the first named insured, so it does not satisfy the policy's cancellation clause. Reason B is not correct. Policy language specifies delivery to the first named insured, not any listed insured, so mailing to an additional insured is insufficient. Reason D is not correct. The standard cancellation provision does not require the insurer to state a reason. Failure to include a reason would not invalidate a proper notice to the first named insured. Question 9. Under an ISO personal auto policy, Form PA0001, how may the named insured initiate cancellation, and when does it become effective? A. Provide a written notice to the insurer. Cancellation effective on the date the insurer receives the notice. B. Notify the producer by telephone. Cancellation effective immediately upon the call. C. Deliver a completed cancellation endorsement to the insurer. Cancellation effective on the date shown on the endorsement. D. Submit a digital request via the insurer's website. Cancellation effective 30 days after submission. The correct answer is A. The correct answer is that cancellation under ISO PA0001 requires a written notice to the insurer and is effective on the date the insurer receives that notice per policy provision. Reason B is not correct. Verbal notification does not meet the policy's requirement for written notice. Reason C is not correct. A cancellation endorsement is issued by the insurer, not how the insured initiates cancellation. Reason D is not correct. Digital requests and a 30-day waiting period are not provided for in the ISO form. Question 10. A homeowner's insurance policy was issued to the Millers on January 1st. On March 15th, the insurer discovers that the Millers materially misrepresented the dwelling's replacement cost on the application. Under the standard ISO HO3 cancellation provision, what is the minimum notice period required for the insurer to cancel the policy? A. 10 days. B. 30 days. C. 60 days. D. Cancellation is not permitted until policy renewal. The correct answer is B. Under the ISO HO3 form, the insurer may cancel for any reason within the first 60 days with 10 days written notice. After the initial 60 days, cancellation is allowed only for specific reasons such as material misrepresentation and requires 30 days written notice. Reason A is not correct. A 10-day notice applies only during the first 60 days for any reason or for non-payment of premium, not after the initial period for misrepresentation. Reason C is not correct. A 60-day notice period is not specified by the form. The correct requirement is shorter for both initial and post-60-day cancellations. Reason D is not correct. Cancellation is permitted after 60 days for reasons such as material misrepresentation, so it is not restricted until renewal. Question 11 under Part A of a standard personal auto policy. How are legal defense costs for bodily injury suits treated relative to the liability limits? A. They are paid within the per-person limit of liability. B. They are paid within the per-occurrence limit of liability. C. They are paid in addition to the policy's liability limits. D. They are subject to the policy deductible before payment. The correct answer is C. The correct answer is that legal defense costs under bodily injury liability coverage are paid in addition to the policy's liability limits, as part of the supplementary payments provision. Reason A is not correct. Defense costs are not drawn from the per-person limit. They are supplementary payments outside the limits. Reason B is not correct. Defense costs do not reduce the per-occurrence limit. They are paid in addition to it. Reason D is not correct. There is no deductible applied to defense costs under bodily injury liability. They are covered as supplementary payments. Question 12. A personal auto policy provides property damage liability coverage for damages an insured is legally obligated to pay for injury to another's property. The insured's teenage daughter, with permission, reverses the covered auto in the driveway and collides with her own backyard fence, as well as the neighbor's fence. A. Both fences are covered up to the policy limit without a deductible. B. Only the neighbor's fence is covered up to the policy limit minus a deductible. C. Only the neighbor's fence is covered up to the policy limit without a deductible. D. Neither fence is covered because the insured's own property was damaged in the same incident. The correct answer is C. Property damage liability under a personal auto policy pays for damage to third-party property. The neighbor's fence, up to the policy limit, excludes damage to property owned by the insured and does not apply a deductible to liability claims. Reason A is not correct. Property damage liability excludes damage to the insured's own property, so coverage would not apply to that fence. Reason B is not correct. Liability coverage under a personal auto policy does not include a deductible for property damage claims. Reason D is not correct. Damage to the neighbor's fence is covered as third-party property, so it would not be entirely excluded. Question 13. Under Coverage E personal liability of the ISO Homeowners HO3 policy, which of the following correctly identifies all persons insured under this section? A. Named insured spouse if a resident, relatives, residents under age 21 inches, the insured's care, and full-time students under 24 living away at school. B. Named insured, their spouse, and any relative by blood or marriage but no students or boarding guests. C. All persons who regularly occupy the insured premises, including seasonal boarders, tenants, domestic employees, and any student guests, regardless of family relationship to the named insured. D. Named insured, spouse, resident relatives, and volunteers performing services without compensation, but excluding full-time students living away at school. The correct answer is A. The correct answer lists the ISO definition of insured under Coverage E, which includes the named insured and spouse if residents, resident family members, residents under 21 inches care, and full-time students under 24 living away at school. Reason B is not correct. This option omits resident relatives under 21 inches care and full-time students living away from home, which are included under Coverage E. Reason C is not correct. This option improperly extends coverage to boarders, tenants, domestic employees, and other guests not covered by the policy. Reason D is not correct. This option excludes full-time students under 24 living away and incorrectly adds volunteers performing services without compensation. Question 14. Under Coverage, A bodily injury and property damage liability of the Commercial General Liability Coverage form, which of the following claims would be covered? A. Expense for first aid administered by the insured to injured persons. B. Liability for damage to temporary lease structures arising from insured operations. C. Injury to an employee of the insured occurring during work tasks. D. Loss of business income due to damage to the insured's premises. The correct answer is B. Coverage A provides liability for bodily injury and property damage that the insured becomes legally obligated to pay, including damage to premises or structures rented to the insured within specified limits. Reason A is not correct. This describes a supplementary payment rather than the insuring agreement under Coverage A. Reason C is not correct. Employee injuries are excluded by the workers' compensation exclusion in Coverage A. Reason D is not correct. Business income loss is covered under Coverage D, not Coverage A. Question 15. Which of the following offenses is not covered under Coverage B personal and advertising injury liability in a standard commercial general liability policy? A. Slander through oral publication of material that harms a person's reputation. B. Breach of contract for failure to deliver contracted goods or services. C. Unauthorized use of another's advertising idea in promotional materials. D. Electronic publication of material that invades an individual's privacy. The correct answer is B. Coverage B covers personal and advertising injury offenses such as slander, misuse of advertising ideas, and invasion of privacy. A breach of contract is not considered a personal or advertising injury and is excluded. Reason A is not correct. Slander is explicitly listed as a covered personal injury offense under Coverage B. Reason C is not correct. Unauthorized use of another's advertising idea is specifically included as an advertising injury. Reason D is not correct. Electronic invasion of privacy is a covered personal injury offense. Question 16. A customer at Clearview Grocery slips on a wet floor and fractures their wrist. The store's commercial general liability policy includes Coverage C medical payments with a per-person limit of $5,000 and a one-year reporting period. If the customer incurs $7,000 in medical bills but does not sue, what amount will the insurer pay under Coverage C? A. $0 because no lawsuit was filed. B. $2,000, the uncovered portion after the deductible. C. $7,000, the full amount of medical expenses. D. $5,000, the per-person medical payments limit. The correct answer is D. The correct answer is that the insurer will pay the per-person limit of $5,000 under Coverage C, regardless of fault and without requiring a lawsuit. Reason A is not correct. Medical payments coverage applies regardless of whether a lawsuit is filed or negligence is established. Reason B is not correct. There is no deductible under Coverage C. Any expense above the limit is simply unpaid, not subject to a deductible. Reason C is not correct. Payments under Coverage C cannot exceed the per-person limit even if actual expenses are higher. Question 17. Johnson Roofing's commercial general liability policy is written on an occurrence form and was in effect from January 1, 2021 to December 31, 2021. On March 15, 2022, a homeowner reports water damage caused by a roof leak that first occurred on November 30, 2021. Assuming timely notice, which policy period's coverage will respond? A. The 2021 policy, because the damage occurred during its term. B. The 2022 policy, because the claim was reported after expiration. C. No coverage, because the policy had lapsed before discovery. D. Both policies sharing responsibility since discovery and occurrence span both terms. The correct answer is A. The correct answer is that the occurrence form policy in effect when the leak occurred on November 30th, 2021 will respond, regardless of when the claim was reported. Reason B is not correct. On an occurrence form, coverage is determined by when the loss occurred, not the reporting date. Reason C is not correct. An occurrence that falls within the policy term remains covered even if the policy has expired before discovery. Reason D is not correct. Only the policy in effect at the time of the occurrence applies. Concurrent coverage does not apply here. Question 18. Which statement best describes the expected or intended injury exclusion in a standard ISO commercial general liability policy form? A. It excludes coverage for any bodily injury or property damage regardless of insured's intent if the result is foreseeable. B. It applies only when intent to cause injury is proven beyond a reasonable doubt in a civil proceeding. C. It eliminates coverage for bodily injury or property damage that is expected or intended from the insured standpoint. D. It excludes coverage for injuries that an insured could foresee as a possible result of a lawful act. The correct answer is C. The expected or intended injury exclusion precludes coverage when the insured expects or intends bodily injury or property damage, measured from the insured's own viewpoint. It does not hinge on foreseeability or require a criminal-level proof of intent. Reason A is not correct. Foreseeability alone does not trigger this exclusion. The insured must have actually expected or intended the injury. Reason B is not correct. The exclusion is based on the insured's intent, not on a criminal-style burden of proof in a civil action. Reason D is not correct. The exclusion is not activated by mere foreseeability of harm, but by the insured's expectation or intent to cause injury. Question 19. Under a standard commercial general liability policy, a holding company agreed by contract to assume another party's bodily injury liability. A third party sues for injuries covered by that contractual assumption. Which type of loss would be excluded under the CGL's contractual liability exclusion? A. Bodily injury sustained by a visitor slipping on the insured's showroom floor. B. Personal and advertising injury from a false arrest claim. C. Property damage caused by a boiler explosion under a separate service contract. D. Bodily injury liability assumed through a written indemnity agreement. The correct answer is D. The CGL contractual liability exclusion removes coverage for liabilities the insured has assumed by contract. Other listed injuries are not assumed contractual obligations. Reason A is not correct. A slip and fall claim at the insured's premises is not a contractual assumption of liability and would remain covered. Reason B is not correct. Personal and advertising injuries like false arrest are excluded under a different part of the policy, not the contractual liability exclusion. Reason C is not correct. A boiler explosion under a separate contract does not involve assumed bodily injury liability under the CGL's contractual liability exclusion. Question 20. A hotel bar employee served alcohol to a patron who became intoxicated and later injured a guest in a fall. The injured guest sues the hotel under its CGL policy. Which claim is most likely excluded by the liquor liability exclusion? A. Claim for defamation made by the patron against another guest. B. Damage to bar furniture when the patron slipped. C. Bodily injury arising from the patron's intoxication. D. Medical payments for a non-alcohol-related slip on a wet floor. The correct answer is C. The liquor liability exclusion specifically removes coverage for bodily injury resulting from the sale or service of alcoholic beverages. Other claims remain subject to standard coverage terms. Reason A is not correct. Defamation is a personal and advertising injury, not a bodily injury from alcohol service, and is excluded under a different policy provision. Reason B is not correct. Damage to bar property from a slip is not caused by intoxication and would not be excluded by the liquor liability exclusion. Reason D is not correct. Medical payments for a non-alcohol-related slip are not covered by the liquor liability exclusion and could be paid under the medical payments section. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.